Good morning. We will pay attention to VAT today. On 1 May, the VAT control account had a credit balance of 12,455. We will start the VAT control account on the credit side, indicating that there is a credit balance in the VAT control account of 12,455. If this is a credit balance, it is a liability to the business, indicating that the business owes money to SARS. If the VAT control account had a debit balance, it would be an asset, indicating that SARS must pay money back to the business. In the cash receipts account, the VAT amount indicates that VAT was collected when goods were sold for cash and when services were rendered for cash. That means the business collected 11,200 on behalf of SARS, and this money must be paid over to SARS. Therefore, we will indicate in the VAT output account at the end of the month that the bank account was debited and VAT output credited with 11,200. When we sell goods, the goods go out of the business and the money will be paid out of the business to SARS. Therefore, VAT output is a liability. In the cash payments journal, the VAT column indicates that VAT was paid on trading stock, on equipment, and on other sundry expenses that were paid. When you pay VAT, when goods are purchased coming into the business, this VAT input is an asset to the business because the money can be claimed back from SARS, and this money will come into the business in the future. We will debit the VAT input account because it is an asset, and assets increase on the debit side, indicating that the bank account was credited with 7931. Therefore, the VAT input asset increased with 7931. In the debtors journal, the VAT column indicates that money was collected on behalf of SARS on credit sales. This money will be paid to SARS in the future, so it is a liability, and VAT output is credited, indicating that this double entry appeared in the debtors control account on the debit side 6978. Increasing the liability. In the creditors journal, the VAT amount indicates that VAT was paid when goods were purchased and when consumable stores were purchased and other items were purchased on credit. This VAT can be claimed back from SARS. The VAT input account will be debited to increase the amount that can be claimed from SARS. The creditors control account is credited with the total amount, and VAT input is debited with 4239. At the end of the month, we will add up the VAT input to indicate that the total VAT input that was paid out when goods were purchased or expenses paid can be claimed from SARS, and this will now be transferred to the VAT control account. So at the end of the month, the VAT input account is closed off and the balance is transferred to VAT control. Because the VAT input is credited, VAT control will be debited. On May the 31st, VAT control is debited with the amount that's transferred from VAT input 12170. The VAT output account has a total of 18,178. This will be transferred at the end of the month to the VAT control account to close off the VAT output account. So there will be no balance left over in the VAT output account. The total amount is transferred to VAT control. Because VAT output is debited, the VAT control account will be credited to indicate that is the amount that must be paid to SARS. And if we balance the VAT control account, we will see what is the total amount that's outstanding to SARS. The credit side is bigger than the debit side, so we will add up the credit side first, then subtract the debit side to work out what is the balancing figure, 18463, and that is the balance transferred to the 1st of June, and that is the amount that's outstanding to SARS that will be paid to SARS in the future. So in your balance sheet, you will show that there's a liability for SARS of 18463.